We have spoken to leaders in both the House and the Senate over the past several weeks about digital asset regulation. Our next guest says that he did not endorse the House-led efforts that we've been talking about, but he has called the Senate's efforts, in his words, carefully and thoughtfully considered all components of the market. Joining us right now, he can tell us himself, is the CFTC Chair Russ Behnam. And Russ, welcome. It's good to see you.
Thanks, Becky. Good to see you, too.
There's a lot of confusion out there about where things stand. There's a recent court ruling that dug into XRP and basically said that these contracts, they're trading for retail at XRP, is not a security. Gary Gensler has been pretty evasive when it comes to kind of getting nailed down on what he thinks about these things. Lay it out for us. Tell us where you think things stand based on what the court ruled, what the law says at this point.
Becky, thanks. It's good to be with you guys. The court decision, and there have been a few in the past couple of weeks, really just, I think, validate what I've been saying for a couple of years, that there needs to be action by Congress so that we can fill these gaps in the crypto space. And I've said, as the chair of the Commodity Futures Trading Commission, we've been bringing enforcement cases without clear authority over the space. And a huge portion, and I've argued up to 70% of the market, is largely unregulated because they constitute commodities.
That's got to be really frustrating as a regulator.
Well, it feels frustrating, certainly, but also we're bringing these enforcement cases, and we're bringing them because we're having people come to us and gives us tips and complaints. So we're not using those traditional tools, registration, surveillance, oversight, so that we can clean up the market, that we can protect investors. My mission is to protect investors and to preserve the American financial system. And if I don't have those tools, I can't do that with this market.
Where do you think the biggest problems are, the biggest frauds, the biggest places where investors are getting fleeced?
You know, believe it or not, a lot of the cases we've brought, notwithstanding some of the bigger cases against more traditional crypto firms, are pump and dumps, Ponzi schemes, the same types of schemes and fraud that we've been seeing in financial markets for decades.
Like bucket shops.
Bucket shops. And, it's just a different asset, whether it was FX or whether it was metals or traditional, securities. Now, this is an easy asset class, which is speculative. People get a little bit of fervor. They think they can make a quick buck. And you get a pitch and, you put some money into it. Maybe you put a little bit more money into it. So that's what we've been seeing for the better part of a decade. And what frustrates me, and I've said this to Congress before, is with this limited tool we have, we're probably dealing with the tip of the iceberg. There's probably so much fraud underlying what we've been able to expose. And that's a problem, because you have American investors, pensioners, retirees, and folks just thinking that this is going to be a quick buck. And in fact, they're going to end up losing their money.
I mean, not to mention that bad guys and criminals go where there's a vacuum, where there's a void,
sure.
Right? Like they're looking at this because nanny, nanny, boo-boo, you can't catch us type of mentality.
And we're seeing the development of this. There's been a little bit of jurisprudence about what tokens are commodities and securities. Obviously, Bitcoin, pretty clearly a commodity. But you're starting to see some more sophisticated financial institutions draw those lines and list tokens which probably clearly fall in the non-security or commodity space. And to your point, that becomes a regulatory vacuum. They can play in that space knowing that no market regulator or bank regulator can touch them.
Can I just ask you, one of the reasons I think that regulators and Congress and others have been loath to actually deal with crypto in a meaningful way is because fundamentally, underneath it all, it is supposed to be uncontrollable. Mm-hmm. And so what is the benefit of effectively blessing something that you actually really can't control? And is it a smokescreen to say, I'm going to control this thing over here, and yet what's happening over here outside of the United States and other places, I cannot control at all, which, by the way, may have a huge impact ultimately on the valuation of what you're seeing right here?
Yeah, so I'll answer that in two parts. The latter first. This discussion about domestic versus international, we deal with it in all financial markets, right? We dealt with it after the financial crisis. You need comparability. You need harmonization across jurisdictions. Otherwise, you're going to find races to the bottom in sort of low regulatory jurisdictions and environments. I've been chair for 2.5 years. The conversation 2.5 years ago was focused on smaller island jurisdictions moving forward with a regulatory framework. Now we have the UK, the EU, and Hong Kong, Singapore actually having crypto regulation. We need to move forward, and Andrew, I think this goes to your first point, is I'm a market regulator. I've been seeing this market develop and evolve, ebb and flow over the past 3, 4, 5 years, up to $3 trillion, down to less than $1 trillion, now floating just above $1 trillion. The fact of the matter is you have institutionals, investors, you have retail investors participating in this market, and I can't step back because of this fear of validation. I can't step back because what is the technology going to be in the future and what impact will it have on our economy and our country? Those are not the questions I ask. I have to ask, what is my mission? What's my responsibility? And as long as I bring enforcement actions, even one investor, that's all that matters. I have to protect him or her in this country because there's schemes, there's frauds, and there's bad stuff going on.
Can you just tell us why it's taking Congress so long to get to any sort of solution on this, even in the wake of these huge frauds and schemes like FTX coming down, all of these people? I mean, there are people losing a ton of money on some of these things. What the heck is going on?
One would hope, and I think historically we tend to see legislation and policy come after crises, 2008 to say the least. I think and I've had a lot of conversations with members of Congress on both the House and the Senate side, and there's just a lot of, there are a lot of differences in points of view about what this technology will be, what its impact will be on our economy and financial markets potentially. And ultimately, given all of this fraud, there's a viewpoint of let's just make this go away and let's squeeze it out of the country versus let's endorse this, let's create innovation, let's support that. I try to balance myself in the middle, saying we have to focus on markets and customer protection.